Today we will present Objective 7 for Chapter 1 of Financial Accounting. Objective 1 will focus on the relationship of generally accepted accounting principles, otherwise known as GAAP, to financial statements and the independent CPA's report. We will also identify the organizations that play an important role in and influence GAAP. First, let's define what GAAP is. GAAP is Generally Accepted Accounting Principles. They are the guidelines for acceptable accounting practices. GAAP focuses on the understandability and uniformity of financial statements. It provides rules and procedures for how businesses should handle transactions and report financial information. It provides the conventions, procedures necessary to define how businesses should acceptably practice accounting. Financial statements are actually prepared by the management of an organization, but outside auditors, otherwise known as CPAs, certified public accountants, then analyze and conduct an audit, which is a sample of the financial records of a business to confirm that the business has prepared its records according to generally accepted accounting principles. When a CPA performs his audit, he does not analyze every transaction that a business performs. It would be impossible to do that. What they do is establish a sample of the types of transactions and functions that the business does, and then samples those transactions to determine if generally they adhere to GAAP. If they note discrepancies when they perform this sample, then they will go back and analyze accounting procedures and practices in more detail, possibly take a larger sample, and also discuss these issues with management. The CPA essentially provides an independent outside report stating whether or not they believe, in their opinion, the business has followed GAAP. All publicly traded companies are required to submit an audit. An audit will produce what is called a report from the CPA firm, and the report will indicate whether they believe the business has performed according to generally accepted accounting principles, and it will state that. This report is then published so that investors and creditors know whether or not there are any exceptions to how the business is performed relative to GAAP. So who are some of the organizations, or what are some of the organizations that influence generally accepted accounting principles? Well, the first and foremost is the Financial Accounting Standards Board, otherwise known as FASB. FASB is considered to be the most important body for developing and issuing rules on accounting practices. They are essentially responsible for developing GAAP and interpreting emerging accounting issues. They issue what are called Statements of Financial Accounting Standards. They're known as FASB statements. These statements help to provide guides to businesses to make sure that they can follow GAAP. A second entity that helps to influence accounting practices is the American Institute of Certified Public Accountants, the AICPA. It is a professional association for CPAs. It influences accounting practice through the activities of its senior technical committees. The third entity is the Securities and Exchange Commission. The Securities and Exchange Commission is an agency of the federal government. It has the power to set and enforce accounting practices for publicly traded companies. So any publicly traded company must follow whatever laws or rules that are established by the Securities and Exchange Commission. Additional entities that influence generally accepted accounting practices are GASB. GASB is the Governmental Accounting Standards Board. It's very similar to FASB, but they focus on issuing proclamations relating to state and local governments. Another group is the International Accounting Standards Committee, the IASC. This group develops international accounting standards. It is also working very closely with FASB and GASB to ensure that organizations are handling issues and emerging issues in similar fashions across the different countries, so that as businesses and investors are looking to work and do business around the world, we can try to understand things in a similar fashion. Next is the Internal Revenue Service. The Internal Revenue Service provides guidelines for the determination of taxable income, including the preparation and collection of taxes. This particular group is important because corporations generate profits and therefore must pay some form of taxes on their income, and so therefore we have to make sure, as we're developing our financial statements and records, that we're paying the appropriate amount of taxes for that income. Lastly, we have the Institution of Management Accountants, the IMA. This particular group adopts a code of conduct for management accountants, those types of accountants that are working within the management of the business or businesses. So, what is GAAP? Please record your answer on your note sheet. Why is GAAP important to readers of financial statements? Please record your answer in your note sheet. And that concludes our notes for Objective 7 of Chapter 1. Thank you.